Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden stories within financial reports. Today we're diving into News Corporation's latest filing, and let's just say they're busy buying back their own stock, which often makes investors consider joining our Discord community, linked in the description below. This report, filed on July 14th, 2025, is a current report essentially telling us what's happening right now. It's like a quick check-in on the company's pulse. The main event here is News Corporation talking about its stock repurchase program. You know, when a company buys its own shares back from the market, they've authorized up to $1 billion for this. Why do companies do this? Well, it can make the remaining shares more valuable because there are fewer shares out there. It can also signal that management thinks the stock is a good deal. We're looking at the filings for News Corporation, the company behind a bunch of well-known media outlets. Think of the Wall Street Journal, the Sun newspaper in the UK, Fox News in the US, and many others. They're a giant in the media landscape. They have two main classes of stock, Class A and Class B. These often have different voting rights, which is a common way for controlling shareholders to maintain power, even if they own fewer overall shares. The report details that under rules in Australia, specifically the Australian Securities Exchange or ASX News Corporation has to report these stock buyback transactions daily if they happen. It's like a daily transparency requirement for them in that market. Now, these buybacks are what they call forward-looking statements. This means they're statements about their intentions and future expectations. They're saying they intend to buy back stock from time to time, but they also include a big disclaimer that actual results could be very different. They mention things like changes in stock price, general market conditions, and other risks. This is standard practice to protect themselves legally. They're basically saying, we plan to do this, but a lot of things could change that. The key takeaway here isn't a specific financial number in terms of performance for this particular report, but rather an update on their capital allocation strategy. They're actively managing their shareholder base and capital structure. It's a sign of confidence from the company, or at least an attempt to project that confidence. When a company repurchases shares, especially under a large program, it suggests they believe their stock is undervalued or at least a good investment compared to other opportunities. The filing also points to two exhibits, Exhibit 99.1 and Exhibit 99.2, which are the actual disclosures made to the ASX. These would contain the specific details of the buybacks on particular days. Unfortunately, we don't have the content of those exhibits directly in this document, but their existence confirms the ongoing nature of these repurchase activities. It's like seeing the supporting evidence for their claims. This filing itself, like many modern SEC filings, includes something called an XBRL document. This makes the data machine readable, allowing for easier analysis by investors and regulators. It's the digital bread and butter of financial reporting now. The report is signed by Michael L. Bunda, who holds significant titles like Senior Vice President, Deputy General Counsel, and Corporate Secretary. This indicates the report has been reviewed and approved by key legal and executive figures within News Corporation. Now, looking at this report through a Warren Buffett lens, what are we seeing? News Corporation is actively returning capital to shareholders through buybacks. This is generally positive unless they're borrowing heavily or paying too much for their own shares. The $1 billion authorization gives them considerable flexibility. It's not a guarantee they'll spend the whole amount, but it shows intent. We'd want to see the details of when and at what prices these buybacks occurred to fully assess their effectiveness. Are they buying when the stock is high or low? Are they taking on debt to do it? This report doesn't give us those specifics, but it highlights a strategic financial move. The risk here, as their own disclaimer points out, is that the market can be unpredictable. If News Corp focuses too much on buybacks and neglects core business investments, like developing new content or expanding into new markets, it could hurt them long term. Also, if their stock price were to plummet significantly, paying a high price for buybacks would mean they essentially overpaid, destroying shareholder value instead of creating it. The forward-looking statements caveat is critical. It's a reminder that past actions and stated intentions aren't a crystal ball. So what's the overall story here? News Corporation is demonstrating financial discipline and a commitment to returning value to its shareholders by actively purchasing its own stock. It's a signal of confidence in their future prospects and their current valuation. For investors, this is generally a good sign, but it's crucial to remember that the devil is in the details, and the actual impact depends on the execution of these buyback programs. They are managing their capital, which is a good thing. We need to keep an eye on how this unfolds, and if it directly translates into stronger earnings per share or a healthier stock price over time. Alright, that's our brief dive into this News Corporation filing. What's your take on companies buying back their own stock? Let us know in the comments. If you found this breakdown helpful, please hit that like button and subscribe for more decoding of corporate finance. And don't forget to check out the Discord link in the description to join the conversation. Thanks for watching, and we'll see you in the next one.